Then they're going to monitor you, see what you buy, control what you buy, get a social credit score. Your freedom will go goodbye.
Hi, everyone. Welcome back to 21st Financial Biweekly Market Update, where we share what we see in the traditional and digital markets. I'm Alex Kamner, the host, with Tim Nihill, our founder and CEO, and Alex Krieger, our digital markets analyst. We will be talking about today's big topics like the continuation of this banking saga, the disconnect between bond and stock markets, inflation still continuing to rise, but slowing down a little bit, and then a small pump in the Bitcoin and Ethereum markets. If you enjoy the content, please like, share, subscribe, and comment below. Tim, off to you.
Awesome. Hello, everyone out there. Happy Wednesday, let's say it is, this week when we're recording this one. Happy to be reporting from New England, and it's finally getting warm and sunny again. And so everyone's starting to come outside and watching people come outside after having 3 months of cabin fever is pretty entertaining. There's a market update for today. People in New England going outside. There's a bunch of different things going on with the traditional markets. The next couple weeks are going to get pretty interesting with earning reports coming out, and also another discussion of a potential for a Fed rate hike. At this point, probably we'll get one more at about 25 basis points or 0.25%. And I think you're going to start to see these rate hikes get dialed back, which the stock market seems to be pricing in. So from that standpoint, the question is, well, is it going to be enough to stop inflation? The answer is no, which we've said all along. And a lot of people are starting to wake up and see the same thing. Commercial real estate is going to be the next trigger. So we already know we have a banking crisis, regardless of what Janet Yellen says, because quite frankly, she's just full of garbage. If you listen to anything that she says, I mean, it's just going to get you wiped out. It's just tremendous. I don't think I've ever seen more false news and propaganda in the media channels than I have seen in the past 2 weeks. And maybe part of that's because I spent a couple days visiting my father, and he's retired and watches this stuff all day. And it's just absolutely incredible, just the absolute lies that are being sold across the board on the banking system, on the financial system, on the strength of the U.S. dollar.
The debt limit and the crisis. The
debt limit crisis, spending, the Ukrainian war, which, while that information started to come out, and now you see the stuff with France coming out. So from like a government perspective, like 90% of the world has already sold themselves to the Chinese, and in the United States, it's kind of the last man standing. And then we have these people that are in charge that are just laughable. I'm a huge chess player and always have been. And if you put like the leadership of today's America in front at the chess table, they're basically checkers players playing chess masters. So that's your future. Congratulations. Hey, and you know what? I have children, so I'm involved in this just like everybody else, but it's kind of interesting coming from a family that has like the generational history here of going to war and, fighting different wars and then having the stories passed down. And when you have and come from a very, very pro-America and United States and freedom background, and all of a sudden your elders are saying this country's over. So it's happening. It's finally happening, and they're finally talking about it. The other thing I think which it ties into is now being talked about across the board is the de-dollarization, or the countries across the world starting to not use the U.S. dollar, and the U.S. dollar will not have its dominance. So it's a big deal for us here in the United States because it means our currency and the benefits we had as being the strongest economic country in the world are pretty much, on life support now. And it's going to cause a lot of havoc in our markets, and it's going to just absolutely destroy the bond markets and cash and savings. And this ties into banking too, because, the banking's bond portfolios are underwater now, and that's what they needed. They need to stay afloat. So we definitely think there's more on the banking side coming. And then at the same point in time, we haven't even touched upon what's about to happen in the commercial real estate market, and that is starting to come to light. So if you're looking at what's going to happen in the next 6 months, put it this way: liquidity is drying up, which means that people can't lend. There is a massive amount of commercial real estate financing and loans that are coming due, and those have to be refinanced. And they're going to be refinanced, and instead of paying 1% to 2%, they now have to pay 6 or 7. Most companies can't afford that financing at that percentage, or most, and at those rates. So the refinancing on the commercial side is going to cause a big problem. There was a woman I saw on TV today from for Macro Mavens or something like that. She's really good, really intelligent. And she said, basically, for this bubble that's about to pop, we're going to unwind about, it was just some ridiculous number. So she basically said that they're preparing for a 50% drop in equity markets. And that'll correlate to the bonds because the bond markets are broken as well. So it is what it is. I think we're all going to start to understand how bad this system has become and gotten over the past 20 years. And everything that's been kind of swept under the carpet is starting to pop up. And as much as we kicked the can for a long time, we're in a place where we can't kick the can anymore. So I think the markets are still very interesting. If you look at it from an investor perspective, we've been saying all along the only protections and insurance you have now are really to take a look at what you're doing and look at how to improve on everything. Because if you're doing the traditional stock bond asset allocation, it's not going to get you through what's happening in our markets today. So, the shift continues and is on. And then for anyone who's been paying attention and talking about and looking at the gold and silver and Bitcoin, you're starting to see the rallies in commodities. And I think those are not only going to continue, but the rallies are going to continue to grow. We might get some ups and downs over the summer, but on a trend path in the next 18 to 24 months, those markets are going to pay out very, very well. And then at the same time, we're just going to have to see what happens on the other side of the rainbow now that the United States is not the dominant player anymore, and more players start to enter the world economy, and other currencies and things are used for global and foreign trade.
So talking about the United States a little bit more, talking about the Fed again for the umpteenth time, U.S. inflation has slowed a bit, which is great. It's still increasing. Last month, consumer prices rose by about 0.4%, which means that the Fed is still then expected to raise rates in May. And do you guys think this is the last time, or do we think that this is just going to continue to happen as inflation is going to continue to increase? What are your thoughts on this, guys?
FedNow payment goes live in June, July with their new system. So I would probably say one more rate hike to stir up more things. And then I don't know about maybe another one third quarter. I don't know. What do you think, Tim? Maybe another one in September.
Maybe September. Definitely we're I think 90% there on getting at least one more rate hike. If they continue, on the rate hike path, if you have a 401k and that traditional asset allocation, it's going to be bad news for retail investors. I was reading something the other day from a retired advisor that talked about different strategies, right? Like if you have someone that has under $1 million in net worth, primarily their house is their asset, and the housing market is still ripe for coming down a little bit and a correction. Those that have about anywhere from 1 to 30 million in net worth, 61 to 64% of their investments are in equities, with the rest in fixed income and cash, which, I think it's kind of like, if you look at the progression, it's kind of like, stocks, bonds, and equity, or stocks, bonds, and cash is kind of like investing for children, right? That's the basic. That's where you start off. And there's no reason for that, especially now that so much has come downstream from the institutional side. And then most other people higher up are private equity and commodities and, physical assets, that type of stuff. So I think anyone with under 30 million in net worth, most people are going to feel the brunt of what's happening, especially if they continue with rate hikes.
I would agree. You know me, Tim. Gold, silver, Bitcoin, Ethereum, those are my assets of choice. I like to physically hold them, right? You got me addicted now to the physical aspect. Gold and silver, I keep getting it shipped to my home. So if anyone, we can also help do that for you guys. So,
Yep. Yeah, those monster boxes are pretty cool.
I know.
It's one of those things where they're going to have to hike rates at least another 2 to 3% to have any impact on inflation, right? So we talked about the potential for we'll have high rates and we're going to have high inflation. That's the probability that's lining up from a statistical perspective. But if you listen to what's been and starting to finally come to the mainstream, the equity markets could have another massive correction, especially if they continue down the path of hiking rates. They're going to put the banking system out of business. And I saw Kevin O'Leary, who was, Mr. Wonderful on the Shark Tank this morning, and he was talking about, well, I don't see any reason why to have money into a local or regional bank, right? Okay, so basically all the money is going to go to Wells Fargo, Bank of America, JP Morgan, and was the other one Citi? So the big
Citi.
Which really lines up well and coincidentally with that new FedNow program, which is the Federal Reserve Transaction Program, which then opens the door. Well, if everyone's money with the big four and they're tied in with the Fed, why don't we just go to a digital US dollar?
That's what they're going to push.
Right.
Yeah. And then they're going to monitor you, see what you buy, control what you buy, get a social credit score.
Yeah.
It'll all be, your freedom will go goodbye. It's a scary thing. That's why there's multiple senators pushing against it right now. I forget, there was
State of Florida came out and said
Florida was one. There was a couple others too that are against it. I know Texas wants to do their own gold-backed digital dollar.
So some sort of digital currency, form of digital currency is coming. I think you're really going to find out how comfortable people are with the government controlling money once that happens. That is a tremendous case for gold, silver, and Bitcoin.
And when we say this, we don't mean we mean physically hold them. We can get them for you, get them on ledgers, and get them offline for you. You have to physically hold these assets, because if something does happen and the government is doing it, they're going to monitor. These big institutions are going to control all the Bitcoin and Ethereum.
Right, and that's what we talked about, right, on especially the crypto side. Most people don't have the bandwidth or the wherewithal to physically store those assets, and sometimes that happens on the physical gold and silver side. So it's something obviously we can help with. But if you look at the budget proposal that, right, Alex, that Biden was talking about, the national debt's going to $51 trillion. So we're in the middle of a currency crisis, and we're in the middle of a sovereign debt crisis.
And hyperinflation,
hyperinflation. And once you step back and drop this notion that the United States is the greatest country in the world, just observe things for what they are, you'll see the truth and the reality of what's really happening. And that's why I think the single greatest thing for people that they could do is just shut your TV up. Go take a walk. Go walk around your cities and your local neighborhoods. Just watch and look at it.
Yeah.
This has become a banana republic. So now you have to manage your finances in a completely different manner. And that's why organizations like BlackRock have come out and said, hey, what's worked for the past 30 years is not going to work in the next 30. So the transition is underway. Hopefully people will catch up to this. I would say even most professionals and financial professionals and advisors are not going to catch up to this in time. And probably what's going to be the single greatest asset classes performing over this decade is going to be gold, silver, and Bitcoin, commodities, real estate, hard assets, oil's going to do tremendously well.
Copper, all these physical assets, man.
Yep. I saw in May we could probably be over $100 a barrel for oil in May, especially after, OPEC came out and did what they did, saying, yeah, we're not going to increase the supply. So it's fun. It's funny to watch, and it's fun to watch, but it's scary to watch because things are going to get very interesting for us here, for sure.
Yeah, it's a banana republic. Saudis buy Russian oil to to avoid sanctions and sells it to Europe. Like, what a banana republic! Like, we're not doing anything about it. Whatever.
No,
Yeah,
like
we'll go after other people.
we are the checkers player at the chessboard. But out of this comes there's a tremendous opportunity. There's going to be massive opportunities in oil. There are going to be massive opportunities in coal. There are going to be massive opportunities in mining. And if you invest properly and work with people who know how to invest properly, you have a tremendous chance to generate, I would say, once in a lifetime wealth. You know, I think of it, we had the Masters this week, right? And you have the live players played and you know, the PGA players played, and they all played for the green jacket, and it was a lot of fun to have them all there. But I think we've fallen asleep to the fact that, or this idea that there's only one way to do things, and there's not, right? Like, if guys want to play in shorts and only want to play 54 holes and don't want to play competitive golf and grind week in and week out, so what? Have another tour. Let them focus on the game in another way. It's going to attract different people, right? And there's nothing wrong with that.
No money there though for them.
Apparently, but the same thing is now happening, right? So you have the PGA is no longer the only dominant tour with superstars. There's a whole other tour. The United States is no longer the economy of the world where, in order to process commodity transactions, every transaction touches the U.S. financial system. That day is over. Now all the countries have said, we're sick of your sanctions, we're sick of your bombs, we're sick of your military, and we're going to do things our way. So now there are different players. There's a whole other system. There's a whole other way to play the game.
Well, parallel economy. That's
Great.
it.
Great.
Completely.
No. So it is, I mean, that's really, I think, what it comes down to. And over the past 2 weeks, we've just seen so much more information come out and show itself to just demonstrate that, you know, this, when you see CNN, Fox Business, CNBC starts talking about de-dollarization, you know it's here. And what I like to share with people that don't understand, like, it's very, very hard for a retail investor to day trade and do very well, because the big firms have already made the trade that you're going to do 6 months before you're doing it, right? So by the time the retail investor finds out, for the most part, it's already happened. So we already know that if we're talking about de-dollarization, it's here.
Getting back to Bitcoin and commodities, Alex, do you have an update for us on the crypto and digital asset side?
Yeah, we had a nice pump over the week. ETH and BTC were moving right, nice, like we called out 2 weeks ago, I think, or last week. Finally, BTC hit 30,000, broke the 30,000 level, hit 35.17 as the new high for this year, which is amazing. I think we said, what, Tim, 32 we were calling for? I could still see, we could still probably hit that and see a dump. And then with Ether, it could probably do the same thing. We pumped all the way up. It looked like a double top. We didn't hit what we did back on April 9th. We hit 1945, and this time we hit 1937. So we hit a double top. It looks like we could retrace a little bit. If BTC moves, ETH should push. If BTC moves to 32, you should see ETH move up to the 22, 2350 range, and then we may see a retrace because of the Shanghai upgrade that is going on today or later this afternoon, which is going to allow all the validators on the blockchain to withdraw if they would like and sell their Ether stake as well in their rewards, which is 16% of the total Ether supply right now, which is pretty big. I think it's like something 18 million Ether in total. And with liquidity that's been pushing us, with the low liquidity that's been pushing up the market, and the not a lot of liquidity, like you were saying, Tim, in the general markets, you could see it start moving. Right. See some big candles coming in the next couple weeks. So, especially if everyone's de-dollarizing and hyperinflation happens, money's going to flock somewhere, right?
Right. Well, and I think digital assets and the blockchain are going to start to come to the forefront. It'll be interesting to see where it goes.
Another thing happening in the crypto, apparently MicroStrategy, I was reading an article over the weekend. MicroStrategy owns 1 of every 5 Bitcoin in circulation right now,
That's interesting.
which
That's a
the
lot
top
of Bitcoin.
shareholders are Capital International Investment, Vanguard, Morgan Stanley, and State Street. So I think the big institutions, the ones that all own these iShare funds, Vanguard, top 100 fund, you know what I mean? Top
S&P 500. Yeah.
100, yep. They all are buying Bitcoin through MicroStrategy. That's my theory right now.
They just don't know it.
Yeah, correct. Without the common folk knowing. Yep, exactly.
Right. Yeah, and that's what I don't think when we talk about passive investing, right, and especially ETFs and indexes, one of the moral or ethical issues I always had with them, with how they were structured is, at the end of the day, the shareholder rights and voting went to the financial organizations, right?
Correct.
So if you're buying, a stock in your 401k account, you have shareholder rights and you have voting rights and all that stuff, and that's meant to keep the company moving in the direction you want and keep everything in check. And passive investments have taken that away because that means that for the past 20 years, everyone's been dumping their money into Vanguard and, giving basically full control over every company that they're invested in to Vanguard. And Vanguard gets to vote the direction, not you as the investor. So you're now starting to see Vanguard and BlackRock unwind that. Because
And that's why you see the culture shift too, right? Isn't that how you see the culture shift happen? Because they can push it the way they want.
Right. So they've been able to really push agendas the way they want. That's why you had the big ESG.
Yeah.
The whole thing's falling apart, and that's part of it. So, that's so everyone basically invests in Bitcoin without even knowing about it.
Right. That's the crazy thing.
See, Bitcoin's not.
It's not that bad, people. You're going to love it. You're going to love it when your 401ks are the only thing saving it is that MicroStrategy and those index funds.
Right. Right. What was it? Socrates was once, what do you say the most hated person is the one who speaks the truth?
Yep.
Right. And, it's, if people are against it, that you're onto something.
Well, I think that's everything that we had for today. So on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed it and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. Please don't forget to like, share, and subscribe. And if you have any questions or comments, please don't hesitate to put them down below. Tim, Alex, any last words?
Yeah, do your homework, invest wisely.
Not your keys, not your coins. Buy gold and silver. You want hard assets.
Thank you, guys.